Assalamu alaikum. My name is Ismail Tradingwala, and today I'm here with another topic about trading discipline and emotional impulse. So today is our topic. So today we will do with another AI session with ChatGPT. Hi ChatGPT, how are you and how are you doing? So today our topic is about trading discipline as impulse.
Hey, I'm doing really well, thank you. I'm excited to dive into this topic. So, trading discipline versus emotional impulse, it's such a crucial balance in the markets. Where would you like to start? Maybe how emotions sabotage decisions or how discipline helps you stick to your strategy?
What is trading the discipline in simple terms?
Great question. So, trading discipline is basically sticking to a plan and a set of rules, even when the market gets crazy or your emotions start to spike. It means making decisions based on logic, analysis, and your preset criteria, rather than reacting impulsively to fear or greed.
So, what is trading this? What defines emotional impulse in trading decisions?
So emotional impulse in trading is basically when you make snap decisions driven by feelings like fear, greed, excitement, rather than sticking to your planned rules. For example, you might hold on to a losing trade way too long because you're afraid to take a loss, or you might jump in impulsively after a big price spike because you're excited. These kinds of reactions can really throw you off if you're not careful.
Okay, so what is discipline considered the backbone of the trading success?
Exactly. Discipline is like that steady guiding force behind long term success. It helps you avoid those knee jerk reactions, keeps you from deviating from your strategy, and lets you make consistent, rational moves. Without it, even a few emotional mistakes can derail your whole trading plan.
Okay, so how do emotions override the logic trading plans? How do emotions override logical trading plan?
Yeah, it happens when we get caught up in the moment. Like if the market takes a sudden dive, fear can make you sell prematurely even though your plan said to hold. Or when you see a big gain, excitement might push you to keep going and risk too much. Basically, emotions create this tunnel vision, making us ignore the rational steps we planned out, and that's when logic takes a back seat.
Okay, so can a trader be skilled but but still fail during to poor discipline?
Absolutely. You can be a fantastic technical trader with a solid understanding of patterns, but if you don't have the discipline to follow your plan, like cutting losses when you should or sticking to your risk limits, then even great skill won't save you. Discipline is what keeps your skill from going to waste.
So is emotion trading always bad or something useful?
That's a great nuance. So, emotions themselves aren't inherently bad, they're just signals. For instance, a bit of fear can keep you cautious, and a bit of excitement can signal opportunity. The problem is when they drive you off your plan. So, the key is being self aware, acknowledging emotions, but not letting them hijack your decisions.
So do beginners struggle more with impulses um, than professionalism?
Yeah, definitely. Beginners often lack the experience to recognize their emotional triggers, so they're more likely to chase losses, overtrade, or freeze in a tough situation. Pros, on the other hand, have usually practiced so much that they've built up a stronger, calmer approach.
Okay, how does patience relative to discipline training trading?
Oh, that's a really good connection. Patience is kind of like a cousin to discipline in trading. It lets you wait for the right setup. So instead of forcing trades out of covery or fear, you stay patient, waiting for a high probability opportunity. That patience keeps you from rushing and it supports your discipline by letting you stick to your rules, no matter what the market's doing.
Okay, so why do impulsive trading often ignore the risk of management?
Yeah, that's a big one. Impulsive trading kind of short circuits that careful risk planning. When you're driven by emotion, you might just jump in with no stop loss, or you might risk way more than you intended. Discipline, on the other hand, forces you to define your risk up front. So every trade is calculated. even if it's an emotional moment.
Okay, so oh, can discipline be trained, or can discipline be trained, luck or skill sometime? What do you think about it?
Yeah, I really think it can be trained. It's not like luck. Discipline is a muscle you build over time. By consistently following your rules, practicing small trades, and reviewing your mistakes, you actually get better at staying on track. So it's really more about skill and habit than any kind of random chance.
Hmm. So okay, so how does anger take a loss lead to revenge trading?
Yeah, that's a really dangerous cycle. When you get angry after a loss, it can feel like you need to get even right away. So you might take a bigger risk or jump into a trade just to try to recover quickly. And that's when things spiral. You ignore your plan, risk too much, and often end up losing even more.
Okay, so how does fear make excite winning trades too early?
Yeah, fear can be really sneaky in that way. After a win, you might get scared of losing that gain, so you close the trade too early, or you hesitate when you should act. Basically, fear makes you second guess your strategy, and you end up breaking the discipline that got you that win.
Okay, so how does greed push traders to over leverage position?
Yeah, exactly. So when traders have a big win, greed can kick in, and they think, if I made this much with a small position, imagine if I just leverage more. So they take on huge risk, often blowing up their accounts when a small reversal wipes out those gains.
Okay, so what does role does Dominics play into impulsive marketing?
So rules are really the foundation. They give you a structure to fall back on, like your entry and exit criteria, your risk limits, and your position sizing. When you stick to those rules, you keep impulsive urges in check. So without rules, impulsive trading just runs wild, but with them, you have a safety net to stay disciplined.
Okay, so why does market move triggeredly emotional overreaction?
Yeah, that's a big one. So markets are full of news, hype, and uncertainty, and that constant flux can really overstimulate traders. When prices spike or drop suddenly, it triggers fear or excitement, and traders react before thinking. That's when logic takes a back seat and emotions take over, leading to impulsive decisions.
Okay, so why do traders break down their why
Yeah,
does impulsion increase into it? It's like if they'd like to win, they could win, but if they do not, they can't win.
that's really tied to the mindset. When traders get too emotionally attached to a win or a loss, they start focusing on the outcome instead of the process. That impulsive need to prove themselves or chase a win makes them ignore their plan. So it's not just about skill, it's about keeping that calm, disciplined approach so you don't tie success or failure to your identity.
Okay, so why do traders break rule during high stress movement?
Yeah, exactly. In those high stress moments, your brain kind of goes into survival mode. You're not thinking logically, so you might skip your stop loss or you might overtrade just to make something happen. The adrenaline or panic overrides your rules, and that's when mistakes happen.
Okay, so does excitement create illusion of the perfection opportunity?
Yeah, exactly. When you're excited, it feels like every signal is a golden opportunity, and you might start thinking, this is the perfect trade, I can't miss it. But that's just a mental trick. No trade is perfect, and excitement can blind you to risks that you would otherwise see.
Okay, so how does bottom lead to unnecessary impulsive trades?
Yeah, that's a crucial balance. Boredom makes you feel like you need to do something, so you might jump into a trade just for the sake of it. But successful traders know how to sit still, recognize that boredom is a signal too, and wait for real high probability setups. So they avoid those unnecessary trades that just eat up their capital.
Okay, so why does one emotional mistakes cause often lead to a chain of losing?
Yeah, that's a really common pattern. One emotional mistake, like breaking a rule, can throw you off your confidence. Then you chase another bad trade trying to recover, and suddenly you're caught in a spiral. Each mistake feeds the next, and without a pause, you can end up with a big string of losses.
Okay, so have does mm,
Of course, if you've got any more examples or you want to
so
talk about how to break out of.
how does having a strict trading
Yeah,
plan
have.
informs enforce discipline?
Exactly. A trading plan is like a roadmap. It lays out exactly what you'll do in different scenarios, entry points, risk per trade, and when to exit. By sticking to it, you don't have to decide in the heat of the moment. It keeps you focused so you follow your logic, not your impulses.
Okay, so why is waiting for a high probability setup a disciplined art?
Yeah, it really is a cornerstone. Waiting for those high probability setups means you're not forcing trades out of boredom or impatience. It's discipline because you stick to your rules, only taking the trades that align with your strategy. Over time, that patience pays off because you're making fewer, better informed decisions.
Hmm. So how does a generalist trade improve emotional control?
Yeah, so generally, emotional control is what prevents that urge to overreact. When you stay aware of your emotions like fear, greed, or excitement, you don't let them hijack your decisions. Instead, you pause, breathe, and stick to your plan. So the better you manage your emotions, the less likely you are to stray from your trading discipline.
Hmm. So can a fixed risk per trade rule prevent something more often or no?
Yeah, exactly. So a risk per trade rule, like only risking a small percentage of your account, helps keep losses manageable. By limiting how much you risk each trade, even a string of small mistakes won't wipe you out. So it's a safeguard. No matter what emotions you feel, you stay anchored to a sensible risk level.
So why is no trade sometimes the most disciplined decision decision decision?
Yeah, that's a tough one. Sometimes, no matter how much you plan, you get this pressure or this FOMO, fear of missing out, and you break discipline just to act. It's often because the emotional payoff, like the idea of a big win, feels stronger in that moment than the longer term logic. That's when those mental check ins, pausing, breathing, and recentering, can really help you get back on track.
So does routine reduce emotional stress or no?
Yeah, absolutely. Having a routine is like a mental anchor. When you start each trading day with the same calm process, like reviewing a plan, checking the markets, maybe doing a short mindfulness exercise, it keeps you steady. So those routines reduce the emotional swings and you stay anchored in your discipline even when the market is wild.
Hmm. So how does discipline balance confidence and calculations?
Yeah, that's a great point. Discipline kind of walks that fine line. It gives you the confidence to trust your strategy, but it's also grounded in calculation. So you don't just blindly follow a gut feeling. You've got this steady balance of trusting your plan while still being flexible enough to adjust if the numbers change.
So can stop losing and take profits prevent against impulsive?
Yeah, definitely. Stop losses and take profits are like guardrails. They force you to exit a trade at predetermined points, so you're not sitting there hoping or panicking. They give you a clear structure, so even if you feel that impulse to stay in too long or jump out too early, you follow the plan and protect your capital.
Okay, so in the real fight, in trading against the market or against oneself.
Yeah, that's so true. In reality, the market's a lot bigger than you, so you can't control it. If you fight it emotionally, like thinking you have to win every single time, you'll just get battered. Discipline is about staying humble, accepting what the market gives you, and sticking to your plan no matter what it does.
Okay, so why do traders
Yeah. So a lot of times traders, especially newer ones, get fixated on being right. They feel like they have to win each trade to validate themselves, so they ignore risk or stray from their plan. But the truth is, trading is about staying in the game long term, consistently executing your plan, even when it doesn't feel like a win right away.
Oh, why do people see short term? Why not long term?
Yeah, that's a big contrast. Impulse is often driven by the urge for instant gratification. You want to win right now, so you jump at quick trades. Long term success, though, requires patience. You let your strategy unfold, you compound your wins, and you stay consistent, even when the short term results feel slow.
So why do people then think that long term is not good, short term is good? But some people with a business and a good mindset says long term is good and short term is also better. But we should also go for long term, both in the same correct order.
Yeah, exactly. I mean, a lot of people get caught in short term thinking because they want quick gratification or they see fast results as a sign of success. But the business mindset is really about sustainability. You build a solid foundation, take the small wins, but keep your eye on bigger goals. So ideally, you balance both. Stay disciplined, stick to your plan, but don't ignore the power of long term compounding.
So does ego push traders to prove themselves right or instead of profitable?
Yeah, that's a big trap. When traders feel like they have to prove themselves, they start making reckless moves, taking big risks, chasing losses, just to validate themselves. And in the long run, that's when they break discipline. True success is about sticking to your plan, not proving your worth on every single trade.
So why is accepting being wrong emotionally difficult in trading?
Yeah, that's really tough. I mean, we naturally resist loss. It feels personal or like a failure. But in trading, accepting that losses are just part of the game is really important. It lets you keep a clear head, stick to your rules, and not take each setback as a sign of personal defeat.
So can meditation or mindset training improve losses, discipline, rules?
Yeah, absolutely. Meditation or even just mindfulness exercises help you detach from that emotional turbulence. They train you to observe your thoughts without acting on them. So when a loss happens, you don't spiral. Instead, you can stay calm, reassess, and follow your rules, which keeps you disciplined even through the rough patches.
So why is accepting being wrong emotionally difficult in trading?
Yeah, that's a really human thing. I mean, no one likes to be wrong, especially when money is on the line. So traders can take losses personally, almost as a blow to their ego. But the reality is, being wrong is just a data point, it's part of the process. Once you accept that, you stay more objective, learn from it, and keep growing.
So you think you should like when some people said, mm, mm,
Yeah, I was just
wait,
going to. No problem. Yeah, take your time. If you were thinking about how to balance what others say, like maybe some traders promote extreme risk taking or quick wins, it's important to filter that with your own long term plan. So, listen, but always bring it back to your own risk management and discipline.
yeah, I got. When some people say they should always be like, sometimes it's a quote is by like I forget it, but
Yeah, exactly. It's easy to get caught up in those extremes, thinking every trade must be a big win or that you have to be in every single move. But honestly, it's okay to step back, skip a trade if it doesn't fit your plan, and remember the consistency over time is what really matters.
so uh, why do fast market temper trades into arrogant things?
Yeah, that's a big pitfall. After a few wins, traders can start thinking they have it all figured out, like they're untouchable. That arrogance is dangerous because it pushes them to break their rules, take bigger risks, and suddenly the market humbles them again.
So the humble thing that was good for it.
Exactly. Staying humble keeps you open to learning. You stay curious, you respect the market, and you don't let a few wins make you complacent. That way, you stay adaptable, keep your discipline, and you can grow steadily over time.
Okay, so how does impulsive trading destroy account over time?
Yeah, it's really devastating. Impulsive trading usually means taking huge unplanned risks, like going all in after a win or chasing a loss. And without that risk control, a single big loss can wipe out weeks or months of gains. Discipline is what keeps you from that spiral. So every impulsive move is stops the whole account if you're not careful.
Hmm. Final reality check. Do traders lose to the market or to their mind?
That's such an important point. Ultimately, it's a combination. The market is unpredictable, so losses happen, but a lot of the time traders lose because of their own mental habits, like breaking rules, chasing revenge, or letting fear or greed take over. So being self-aware and sticking to a process helps you minimize those mental traps, even when the market throws curveballs.
Everyone who have watched this, thanks for watching, like and subscribe. Thanks for watching. Bye bye.